Okay, so what's up guys, welcome back to another video. Today I'm going to show you a hidden secret here at the NASDAQ with Fibonacci retracements as well as percentage change and the famous psychology chart with euphoria and complacency and then fear and then disbelief, etc. So currently we are sitting here at around 13,800. And if we're gonna take now a short look at the macro chart, so that's the 3-month minus the 10-year treasury spread, which always has indicated a recession and triggered a recession because the bond market is 80 to 90% driven by rational analysis, while the stock market is 80% emotional and 20% rational. So yeah, we have here the deepest inversion since recording here. If you're gonna take us here to the monthly, so this will cause immediate price shocks, deflationary price shocks, because demand destruction, because the recession, because so many people and investors are rushing into bonds, which will drive the bond prices up and the interest rates down. So my best guess is the Fed will pivot here. We have 5.25% and the 10-year are currently sitting around 3.9%. So it's a interest rate spread of about 1.25 to 1.5%. We are making history here. So my best guess is, because the deeper the inversion goes, the deeper the recession will be in the near future. So it isn't that the inversion triggers a recession, it's the uninversion that will trigger a recession. So if you go here over 0, this is when the Fed will pivot. Will cut the interest rates, not pivot. They already have pivot. So my best guess is 5.25% is the top. Inflation will come immediately down. As I said earlier, producer price inflation in Greece is negative 10%, Norway minus 15%, Portugal minus 2%, Spain minus 1%. All is deflationary while they are hiking rates, and while the rates are too high, money supply is contracting the same as 1930s. Why does no analyst see this coming? We have the greatest deflationary event of all time until 2025, after the Fed will announce immediately cut interest rates in emergency meetings, 100 basis point cut, same as 2008, and they will fall rapidly as they rise in 40 months. My best guess is that 7 months interest rate cut cycle from 5.25% to 0% in like 7 months, 7 to 10 months, because the recession will be so deep, and the deeper the inversion goes, the deeper the recession will be, and we have the deepest inversion of all time. Also, the RSI 14 here sitting at the lowest point in history. Like here in 2006 and 2019, every time this was this low, a recession always was followed. So after the reinversion and the yield curve steepening here goes over 0, the Fed will cut interest rates from 5.25% until 0, and here at 3.2% in December 2024 and Q1 2025, then it's the time to sell bonds and buy stocks and crypto and all these assets, commodity, especially commodity, because we are here in a commodity cycle. Because of the printing press of the Fed, they will announce immediately quantitative easing and so on, the same as 2006 to 2008. And yeah, here we have the deepest inversion in December 2000. December 2000 is the equivalent as May 2023. So we're gonna take a look here at the NASDAQ, and here I have your Fibonacci retracements as well, and we are currently in 2000 event. My best guess, this is my best guess actually. So first we are gonna go to the weekly, and then we will see where this is going. So the current narrative is hyperinflation, inflation is going through the roof, and interest rates will have to rise further. I said no. We have the greatest deflationary events coming in the next months. Nobody's prepared. The Fed policy error they created is the same like 1929, which was the cause of the Great Depression, same as now until 2025. Because the M2 money supply is contracting minus 4% year over year. The last time this happened was the 1930s, which caused immediately shocks in the economic cycle with the 1 year lag. So at May 2024, we have deep deflationary trends. No high inflation, deep deflation. So here we are currently at October, November, at this range here. So we hit the Fibonacci retracements 50% here, and then the complacency rally. So here was the euphoria, and yeah, we crashed to 0.5 Fibonacci retracement, and then immediately go here higher. And if we take a look here, percentage change minus 39%, and then we had here a rally of around 42% over the 786 Fibonacci retracement. So now we're gonna look at the 2020s. What is happening? It's the same chart. It's the exact same chart here. We hit the top December 21. Then crashed to the Fibonacci 50 retracement. It's the exact same pattern here. And yeah, how many percent did we crash here from the top to the bottom? Nearly the same. Minus 38%. Now the rally. My best guess is that we will rally here until 14,700, but I will put short options here at around 14,400. Maybe when we hit here the 786 Fibonacci retracements and a little bit above. So here my trend is, yeah, when we hit 14,000, I will create my first short order until we go here at around 14,400. There are my biggest shorts, and then as well as shorts here 14,700, 14,800, and maybe we will get with great luck or so to 15,600. Then I will open massive amounts of short options, and there is that's the risk actually you'll take, because I don't think we will ever go to the 19K. This was here at this range, but we broke it here. So the next step here would be that we go into the fear cycle at around autumn. So my best guess is summer, July 2023 will reach 14,800, if not sooner, and after that we will go into this fear stage until we hit 7,500. It's the same like in 2000 when we hit here this event in August, October 2000. And then we crashed. Nearly 50% down in 3 months or so. That's insane. 50% down. like 3 months. It's the same equivalent as... Okay, no, it takes a little bit longer. Okay, so let's see where this is going. Take here this. Yeah, we go to 7,500 when the recession hits. So it could be April 2024, it could be mid 2024, by the near future. So risk reward is, we have here like 5 to 15% upside potential in the NASDAQ, S&P 500, Dow Jones, and a downside risk of about 75 to 80%. Because after this we will get a suckers rally here, the same as 2000, and then we will crash all the way down to 4,800, and maybe I will put my first buy order, and maybe we'll go to 3,400. That will be insane, and would be the chart equivalent of Ethereum, by the way. So we will hit 3,400 by July 2025, maybe 2026 in the near future. So to hedge against this massacre, we have to go into US bonds. That's what I say.